Okay, good evening again. Let me show you something interesting here, and let me get all these lines out. This is the chart of the Russell Volatility Index, or the Fear Index for the Russell 2000, the RVX, similar to the VIX. And let me teach you a little bit, I shouldn't say teach you, but at least let me try to explain how to read the RVX so you have some predictive analytical capability to figure out which way the market's heading on a certain day or the day after. This is the daily chart of the Russell, the RVX. To the untrained eye, this is like an EKG, right? Well, that's exactly what the market is, an EKG. Sometimes it gives you a heart attack, and sometimes it basically gives you palpitations, but hopefully it keeps all of us alive. So, saying all that, let's take a look at the RVX. Now, if you look at this pattern here, you're going to read a lot of things at one go. So it takes some time to really understand this chart. So the daily chart is basically telling us, in my opinion, that the Russell, which basically shot out of the Bollinger the other day, and we saw that was back on the 1st of August, came crashing down now, and basically tested this this bullish crossover of the 50 and the 34 moving averages, day moving averages, which is bullish. That means the RVX going higher. If the RVX goes higher, what happens to the Russell 2000 in the market? It goes lower. The inverse correlation, just like the VIX. Okay, that's simple stuff. Don't need to explain that. So this daily chart is telling me that it looks like it wants to, this candle looks like it wants to go higher, but when we peek into the internals, and again, this is all reading the tea leaves, we're starting to see a negative divergence where the histograms have gone negative, and it looks like the weakness is starting to creep in. So saying all that, I think if we look at a more shorter term picture and look at the 60-minute, it'll give us a better idea of what we see. Now, if I showed you this chart, I highly doubt, and it's the way you have to ask yourself, that you'd actually be buying this chart. Well, if you're not going to buy this chart and you think it's going down, that means the market's going up. It's really as simple as that. So what do I see here? We have a reasonably good strong support level at the 18 level, so we still have a little bit of room to move. However, these things are dangerously negative for the Russell Volatility Index, which means it is highly positive for the market. If you look at the confluence of this 50 and 34 line and the 50 line, these have certainly turned down, okay, with a gaping, open mouth. So what is it telling me is that they want to rush down. Now, if these things want to rush down, this thing could fall all the way down here. And that would mean the Russell 2000 would get up to about 1170 in a hurry. Now, that's just predicated on the fact that this doesn't turn around and go higher. The other scenario is that, get the drawing tool again, that we base here, because there's a support level, we base here, and this comes down a little bit more, and then it moves up and tries to test these downward sloping 50 and 34 moving average lines around the 20 level. So short term we have a slight pullback. Maybe that's what the Wednesday pullback is, for all I know. And then it collapses. I still believe that, generally speaking, from what I've seen and seasonally speaking, the monthly OPEX, which happens to be this Friday, generally is a positive, bullish biased event. So if that happens, then this thing is going to come down, test 18, and possibly slip towards the 17 level. So that's a quick analysis of the RVX. Keep this in one of your monitors, and I repeat, do spend some money and buy at least 2 or 3 monitors, because it'll help you your trading as you keep different screens open. And I mentioned this during the day. So let me take a look at the VIX. Let me put the VIX up here. And looking at the VIX, why did the VIX IH come out? One second. Looking at the VIX, there we go. Okay, looking at the hourly chart, that's also a picture where you wouldn't be buying this chart. This chart looks like it wants to go down. Where does it want to go down? Well, simplest way of looking at it, you could say that it's coming, it's coming down towards the 1350 level. But and then these lines are crossing down, so it's the same story. This is a negative pattern. This is a negative pattern, and this could be very, in traditional way, can be looked on as a rounded head. You could be basically, yeah, basically it's a triple head, and I don't see any shoulders anywhere, unless you want to call this a left shoulder. So that means we can spike up here, fail, and then go straight down. Not sure, but this pattern itself doesn't lend itself to believing that we are going to see a sharp move up on the VIX. Again, anything can happen, but at least this trend is kind of telling me that this is a bear flag, and that it probably comes down here, and it comes down towards the 12 again, where the market pauses and VIX rises again, all kinds of good stuff. So just a quick picture on the VIX. Let's take a look at the daily. If we look at the daily picture, again, it's somewhat of a same story. This is a pretty sharp move down, and this today, despite the fact that we had a slightly weaker day. So VIX, remember, VIX below 12 is a screaming buy. That means you can basically expect the market to be short term or intermediate term overbought. So you pile in and buy some puts on the market, and that's just generally how the game is played. Let's take a look at the IBB, the biotech index, and the biotech index, similar to my, from the other days. Let's take a look at the 1 hour chart, and the biotech index is looking okay. If I take all these drawings out and just look at this chart quickly, the biotech index is not showing any signs of any major weakness. There are a bunch of biotech stocks that have been doing extremely well, and this is the point where we are. So it can either come down, test the lower Bollinger at the 250 level, or it can break out over and test these highs. So biotech index is also fine. So let's focus on the stocks that we normally look at, the PCYCs, the Athena Healthcares. Then we had a huge move in ICPT. Some of the smaller ones moved. So again, the sector is quite vibrant, and that's keeping up part of the NASDAQ and the Russell 2000, which has a bunch of biotechs in it too. Okay, so that summarizes all the quick market analysis that I can think of right now tonight, and I am going to be posting static charts tonight for everyone to review. A couple of very important announcements. I welcome Siam Shogun as a contributor and a team member of the Clueless 8 team, and his excellent, informative, humorous, and to the point post articles under the Options Cave should certainly be read and absorbed, and I welcome Siam to join me in this venture to grow our community and provide some very insightful risk analytical and his very strong expertise in options management techniques and such. I'm a more of a macro picture kind of person, general market direction, that type of stuff. But then at the same time, Siam is an extremely powerful addition to the Clueless 8 team. Saying all that, I want everybody to keep in mind that things that I mentioned during the chat room hours on the chat room are meant to help traders, not to offend anyone. Sometimes in the heat of battle we get a little rowdy, but you know what? That's just part of being a trader. So again, no offense meant to anyone. I'm here to help. Number two is certainly monitor futures, monitor when you monitor the overall market for general direction. Markets are extremely choppy and volatile, and there are no guarantees that minute to minute anything's going to happen. I mean, that it's going to follow the patterns that we're describing. In the meantime, do email me your Twitter name, your name, username, and email, paid or free trials